Dear students, welcome to my Smart Tally Prime YouTube channel. The students as well as working accountants also. My name is Baburao from Hyderabad. So I am very sorry for the last 1 month. I was not able to do any videos due to some reasons and going some places. And actually, now present also, I am out of country. I am in Australia. So from there, I am making the videos. So from today onwards, you will get all the videos regularly. Okay. And now we go to the today. Our topic of discussion is advanced level, and in this advanced level we are going to work with GST also. Before that, so there are in the middle level there are two topics left out. One is multi voucher or multi invoice printing or printing of all the sales bills. That is one. Another one is print all the ledger accounts. Ledgers means debtors and creditors. So mostly ledgers or some other ledgers also. Print all ledgers or print one ledger statement in Tally Prime. These two are left out because in the Tally Prime, only these two options will work only in the in the licensed version, in the education version, they will not work. So I will show you. This is actually what is the meaning is here. So in our Tally, we will record all the transactions. In that, all the vouchers of the same type like sales, purchases, or the payments, receipt, all these vouchers, we can print on all these vouchers. And in the case of sales, in the places also vouchers only, but in the case of sales, all the invoices, when you make the entry of sales voucher, it will automatically be a sales invoice or bill. So all the sales bills, all these we will print at a time. All the print for any particular time, not individual bills. For any particular, for 15 days, for 1 month, for the whole year, we can print all the invoice vouchers as well as all the sales bills. It is called multi-voucher printing. Sometimes, in the case of sales, when you are printing, you will make 3 copies. First copy, that is original, we will give to the buyer. That is called the recipient. Second copy, we will give to the transporter. The present rule is with all the goods, that is the inventory. When I am sending the goods or inventory should be accompanied with invoice. Without invoice, we cannot send the goods. And previously, we used to send the goods when the VAT was there. We used to send the goods on the basis of we will to send delivery challan along with the goods. But at present, the rule is under GST. The goods should be sent only along with invoice. Without invoice, we cannot send. So, 1 copy to the transporter for the goods, for transporting. Okay, invoice we will give. And then, along with the invoice, if the total value of the invoice value is more than 50,000, we have to give the way bill also. Previously, we used to write manually, but now it is only e-way bill, electronic way bill. There is a portal way for the way bill. So, I have to put the way bill and we have to give the way bill also along with the goods. The bill and way bill, if the value is more than 50,000, we have to send. So, we will make that. And the third copy, triplicate. The third copy is meant for our record. But generally, what we will do, we will make the 2 copies. We will give the 1 copy to the buyer and 1 copy to the transporter. The third copy will not print. So, we will print our copy after some time, that is once in 15 days or once in a month, we will print all the invoices. Then how to print all the invoices, that is the one. And sometimes our auditor or our consultant, they will ask you to send the original, sales invoices, printed sales invoices, they will ask you. In such a case, we have to print it for the whole year and we have to send the invoices to them. This is one. And another one is ledgers. For example, we will send to the creditors for confirmation. We will send the copy to them, their account copy, to asking them to compare with their accounts and confirm whether the statement is correct or not. Or sometimes the debtors will come. We can print the copies of the debtors also for the confirmation. Debtors and creditors. And sometimes the debtors will come. They will ask you to give the account copy. Account copy is nothing but ledger statement. So they will ask you to give the one account copy. In such case, for that one customer, one ledger statement we can print, and for the getting the confirmation from all the debtors as well as all the debtors, we can print all the ledger account statements also in the tally frame. For that, so in this tally frame, how we will do it is, see in this case, when you are in the gateway of tally, so you see, if you are in any voucher or any invoice bill, in such a case, say for example, we will, sorry, in such a case, what we do is, if there is a invoice or any voucher is open, then if you click this Alt P, it will show the report. Current page means the page which is open, and others and all these things. But now the page is not open. For all other reports, for any voucher or sales invoice which is open, we can select current. It will print that. Or for others means all other reports. We have to check this. And in this case, so the print report and last list of reports in this case, multi-ledger reports or multi-ledger accounts. It will show multi-ledgers. In that case, if you click more, it will show many options. In that options, so it will show the options. One is multi-voucher printing and print all the sales invoices. Another one is print all ledgers. Another one is print one ledger account. This will be there in the tally. But here, these options will work only if the tally frame is not education version. It is only a licensed version. If it is education version, it will not show that. So after some time, when with the help of any licensed version, I will show this and I will make the videos. So with this, we will stop this. And now we will go to advanced level. From today, we are entering the advanced level. Advanced level means with GST. This is the main work. So all this work is actually we will not do without GST. Any business now, even small business people, big business houses also, everyone has to work with the GST. Now we are going to GST. Now what we are going to learn is what is GST, why and when the GST is introduced, what is the registration schemes, as well as rules, as well as the types of dealers out of the GST, as well as types of GST. Types of GST, what are the many types in the GST? And GST slabs means GST slab rates. So what are the different rates under the GST? And in this case, and what are the type of invoices in the GST? One is tax invoice, another one is bill of supply. What is the tax invoice and what is bill of supply? This we will learn today. Okay. Now, we will go to this one. So actually, first of all, we have to know GST. What is GST? So what is GST means? What is the full form of GST? Means goods and services tax. The full form of GST is goods and services tax. So goods and services tax is the full form of GST. First of all, we have to know what is meant by tax. Goods and services tax. The tax imposed on goods as well as services. So what is the tax? What is the meaning of tax? See here, for all the governments, either the state government or the state governments, for all the state government and the central governments, to serve the people and to run the government and to provide infrastructure for the people, like roads, bridges, schools, as well as colleges for education, schools for education, then hospitals for health, and also for protecting the country, the military equipment as well as fighting equipment in the military or defense equipment, all other expenses. To meet all these expenses, the government requires money. So in these governments, what they do is they collect money from the people, from the citizens of India, from the people. They collect the money from the people. The money which is collected from the people by the government is called tax. In India, there are two types of taxes. There are two types of taxes from the beginning. One is direct taxes, another one is indirect taxes. What is the meaning? So meaning of direct tax means the people will pay the tax from their pocket directly to the government. They are called direct taxes. So from the pocket of the people, they will pay directly to the government. That is why they are called direct taxes. But in India, previously, the income tax is the main direct tax in India. That along with indirect tax and income tax, wealth tax, estate duty, gift tax, all these are direct taxes. But now, this wealth tax and gift estate duty, they were abolished now, because wealth tax means whatever properties we have to pay the tax. That is called wealth tax. And after the death of a person, his properties will be inherited by the sons and daughters. Now, so in that case, they have to pay estate duty. So this wealth tax and estate duty are abolished now, and now only income tax and gift tax are the direct taxes. Mostly direct, gift tax is very less, and this income tax is the main source of income to the government. Main source of income to the government. Okay, so at present, direct tax means mostly income tax. And next one is indirect taxes. What is the meaning of indirect taxes? Indirect tax means the people will not pay the tax from their pocket directly to the government. They will pay the tax. They will pay only. They will pay, but not directly. They will pay through others. That means other persons will collect from these people, from the people, and they will pay to the government. That is the main example is when the goods are purchased by persons, the supplier or the seller will give the bill. In the bill, they will write the value of the goods called taxable value. The value of the goods, and they will add the tax, and they will give the bill. So the people will pay that to the seller. The buyer will pay the total bill amount. That is invoice value. It's called total bill amount means value of goods as well as tax, including tax. So the total amount they will pay to the seller, and the seller will keep the value of the goods with him, and the tax collected, the tax amount will go to the government. So finally, we are paying the tax also. We are paying the tax, but we are not paying directly to the government. We are paying to the seller, to the other person. So the other person is paying to the government. That is why these taxes are called indirect taxes. But actually in India, previously, there were sales tax for all the states. For each state, one account, one act, sales tax act. Sales tax, CST. CST means central tax. That is one only for the whole India. Sales tax is sales tax for different states, different tax. And customs duty, entry tax, estate duty, excise duty, service tax, VAT, entertainment tax, purchase tax, outright tax. All these taxes were used to be levied. But in this case, the people were suffering a lot. The business people. So when they have to pay different taxes, they have to keep record of all the taxes, different taxes. They have to keep record of all the papers. Instead, they were used to face lot of difficulties. For example, in the case of actually in the business people in India, business people can be divided into three types. One is number one, traders, manufacturers. Number one, manufacturers. Number two, traders. Number three, service providers. Even now, they are the people. Manufacturing, they buy some material, that is raw material. They will carry on manufacturing. They will manufacture something and they will make the finished products, and these finished products will be sold. They are called manufacturers. Manufacturing something. So the excise duty used to be levied on the goods manufactured. On the manufacturing of goods, excise duty will be levied, and when selling, that is the manufacturers will sell, or traders means they will buy the goods, already manufactured goods. They will buy and they will sell them as it is with profit. They are called traders. So when the traders are selling the goods, or manufacturers, after manufacturing, they will sell the goods on the sale. Then again, VAT is to be levied. VAT is levied as well as CST is levied. VAT is for the state and CST is for the central government. And even before VAT, sales tax for each state will have sales tax, wales tax, and they will levy the sales tax, and central government will levy the central tax. That is central sales tax. And so in this case, the people were suffering a lot. And one more thing, that's why what the government did is, from 1st July 2017, so all these are submerged, all these are merged into no sales tax, no GST. This custom duty is still there. Custom duty is related to not Indian people. It is related to the imports. When you import the goods from other countries, the customs tax will be, custom duty will be levied at the airport or harbor. That it is there. Entry tax and excise duty is there. Service tax and all these are abolished. And VAT, entertainment tax is also abolished. But excise duty and VAT and custom duty is not related to the people. It is there always. So instead of sales tax, they passed goods and services tax they introduced. And this VAT and excise duty, the custom duty is there always because it is for imports. So along with goods and services tax, VAT and excise duty is still available now in India. Why these two are there? When the slogan of the government is, when the GST is introduced for the whole India, the GST will be applicable and the GST rates will be the same for the whole of India. That is why the slogan of the GST is one country or one nation, one tax. That is, there is that one nation, one tax. That means one country, one tax. But it is not actually true. This is, as far as the GST is concerned, it is okay, one country, one tax. But still there is VAT and excise duty. Why it is there, we will discuss it later. Okay, so that is why this goods and services tax was introduced from 1st July. But India, this goods and services tax is applicable to the whole of India on all the products, but except some products, they are not brought into the GST Act. They are not brought under GST. That is why GST is not levied on these products. That is, petroleum products means diesel, petrol, lubricants. Lubricants mean engine oil, etc. So, engine oil, petrol, diesel, all these are called petroleum products. On these petroleum products, they are not brought into GST, as well as liquor for human consumption. For liquor for human consumption, beer, brandy, whiskey, like that. So liquor for human consumption, in these cases, the GST tax is not applicable. They are not brought under the GST. That is why these are called petroleum products, that is diesel, petrol, lubricants, liquor for human consumption. They are called non-GST goods because GST is not levied. They are called non-GST goods. But anyhow, they have to collect the tax. For these products, still the previous regime, VAT and excise duty. VAT will be levied by the state government and excise duty will be levied by the central government. This excise duty is levied for the manufacturing. So for manufacturing of vegetable, we will import the crude oil, then that will be made into, that is, they are converted into petrol as well as diesel. That is why that is called manufacturing as well as liquor manufacturing. So VAT is levied, along with the VAT, excise duty is levied. So excise duty and VAT are go side by side on the non-GST goods. So except these two, all other goods, GST is applicable. For only imports, GST, customs duty, and the goods made in India, all the goods come under the GST. Okay, and now, so it is brought into existence in July 17. Actually, the main reason is when there was sales tax or there was VAT, so the VAT or sales tax limit of before this GST, VAT was there. So from 2005, VAT was introduced and 2017, GST is introduced. When what was there, it VAT is the subject of the state government. All the state governments in that will have the Act, VAT, Value Added Tax Act, and the rate of VAT will be different in different states. That is why if the VAT is more, the goods rate will be more, and the VAT is less, the goods rate will be less. So in some states, if it is 15%, in some states it is 25%. That means the value of the product is the same 10,000 PV for 10,000. But in some state, the value is 25,000 rupees is the VAT. In such a case, for 10,000, it will be 2,500. Total cost will be, total value amount will be, the price will be 12,500. If it is 15%, the VAT 15%, the amount of tax will be 1,500. So 10 plus 1,500, it will be 11,500. So in one state, it is 11,500. In the another state is 12,500. Then what the traders do, they buy in the state in which the amount is less. So for 11,500 rupees, they will buy, they will spend some amount, they will take the goods to the other state, and there they will sell with some profit, not 12,500 for the rate of 12,000, they will sell without bill, without giving the bill. In such a case, government is losing the revenue, tax they are losing, as well as the business people there doing the business, they will lose because people will buy from these people only. That is why they will lose the business also. So to avoid all this, they introduced goods and tax, services tax. It is one nation and one tax. Everything will be, every state, the rate will be the same. Okay, like, and also the people, instead of when they're paying all these different taxes, they have to keep the record of all these taxes, and all these will be very burdensome for the business people. That is why in this case, for only GST means they can record the, only they keep the record of only GST, and also it will be very simple than other tax. It will be simple. That is why the business people, without the help of anyone, they can directly, they can keep the records and they can follow this, they can follow this goods and services tax. Okay, and then under the Income Tax Act, this Income Tax Act will be administered or looked after by one central government department called CBDT, means Central Board of Direct Taxes. Direct tax, it is direct tax. That is why this is administered or looked after by CBDT through a department called, Income Tax Department. So the CBDT is the authority, and it will have a department under that Income Tax Department. But in the case of this GST, this GST Act is administered or looked after by CBIC, the CBDT, Direct Tax. CBIC, Central Board of Indirect Taxes and Customs also. There is one customs also. As indirect tax only. We are not going to pay. That is why CBIC, Central Board of Indirect Tax and Customs, and they have one department, Commercial Tax Department, or now they have changed their name also. They have one department, one network called GST Network, Goods and Services Tax Network. They will administer, they will look after the implementation. And in this case, this GST is introduced with the concurrence, with the agreement of all the states. That is why whenever there is to be any changes are to be made or any amendments for the GST, and they have to consult all the states. That is why they formed a council called GST Council. General Government formed a GST Council. This GST Council is headed by the Finance Minister, that is by the Central Finance Minister. The council is headed. He is the chairman. Chairman of the council is Finance Minister, and Deputy Finance, that is State Minister for Finance. And that person, as well as the Finance Minister and any other minister, deputed by in every state government, will be a member. So all the state governments, representatives, that is ministers, one minister will be a member and headed by, chairman is the Finance Minister. So that is called GST Council, and this is GST Council will meet frequently and they will make some decisions. These decisions will be recommended to the Central Board of Indirect Taxes and Customs, and they will recommend to the central government, and central government will give notifications, and these after giving the notification, any changes or anything will come into effect. And this GST will be, there will be a lot of changes. So everything we must be appraised. So we must have knowledge of every amendment, every updated information. So this is done by GSTN. That's called Goods and Services Tax Network. Okay. So this is the thing. And actually, the Goods and Services Tax, in the Vajpayee government, They promoted the idea. They brought the idea to implement this, but you are not able to do. And after Congress government, they tried a lot to bring this GST Act, but they were not able to. And after that, Narendra Modi, by force, by making all the state governments agree for that, all the state governments agree for that, and they brought the which one? We got the GST Act. Okay, the slogan is One Nation. Okay, and in this case, in the world, which is the first country to implement the GST? See, is France. France is the first country. They introduced this GST in 1954. Long time back. They introduced, but at present, after that, one by one, every country they are implementing, and at present, more than 160 countries in the world, they are implementing the GST Act. Okay. Now, and every businessman in India, they have to take a GST number. They have to get the GST number. So for getting the GST number, who has to get? Everyone need not get. For getting the GST number, the central government, they have divided the states in India into two types, into two categories. In the two categories, they divided and they fix some amount of limit, turnover limit is called. That limit is imposed. So the two type categories of states, two different limits they introduced. So the first one is normal category states, and the second one is special category states. Normal category states and the special category states. Normal category and special category. So in this case, normal category states means, I will first of all tell you special category. Special category state means there are only mainly northeastern states and Uttarakhand. Northeastern states, all the northeastern states and Uttarakhand with Pondicherry also. So I will tell you the countries, I mean states, Pondicherry, I will tell you the states. See here. Here. Pondicherry, Meghalaya, Manipur, Mizoram, Nagaland, Tripura, Arunachal Pradesh, Meghalaya, Sikkim, and Uttarakhand. These are all northern states. Uttarakhand is in the Himalayas. And Pondicherry. I will tell you about Telangana. And Pondicherry. These are the special category states. And for these special category states, they impose the limit of 20 lakhs for the goods. 20 lakhs for the goods. And if there are services also, they are providing services also. Providing services means goods and also only services or goods and services. If there are services also, the limit is 10 lakhs. This is called limit of the physical 10 lakhs of total turnover. Annual total turnover. What is meant by total turnover? I will tell you later. Okay. So this is the limit for the special category states. 20 lakhs for goods and 10 lakhs for services also. And all other states except this, all other states, they are categorized as general category, that is normal category states. So all the other states come under normal category states. For all the normal category states, the limit is 40 lakhs for goods and 20 lakhs for services also. That is plus and or services and plus or and or services and or services. And there are services also. Goods plus services or only service automatically. If there is services, their limit is 20 lakhs. So 40 lakhs and 20 lakhs. At present, for Andhra Pradesh, it is 40 lakhs for goods and 20 lakhs for services. But here, in the normal category states, Telangana is given a special concession. That is, if they want, they can be under normal category states, or they can be under special category states. So choice is given to them. But what they selected is 20 lakhs for all. Here, special category, 20 lakhs for goods, 10 lakhs for services. But the normal category, 40 lakhs for goods, 20 lakhs for services. But they selected, now in both the categories combined, they selected 20 lakhs for all, whether it's goods or services whatever it may be. In Telangana, the limit is 20 lakhs. Okay, and then here, what is meant by turnover? That is, this is the 20 lakhs and 40 lakhs is the turnover. Turnover means all the cash sales as well as credit sales. Turnover means all the cash sales and credit sales which are taxable as well as exempt, not taxable. That is exempt or nil rated also. They are taxable, but rate is nil. That means nil rated also. So nil rated are exempted and taxable, all the goods, whether cash or credit, cash sales and credit sales. What is the difference between nil rated and taxable? Nil rated and exempted. Exempted means they are exempt from the tax. No tax is levied on them. Never the tax is levied. So exempt means it is exempted forever. But nil rated means at present the rate is nil, zero. Rate is nil rated means zero rate. So rate is zero, but if the government want, they can change the rate. They can make it 2%, 5% or 10, 12%, whatever it may be. So they can impose the tax in future. But at present, the rate is zero. They are called nil rated. They can be changed later on. But in the case of exempted means, they are exempted completely. They are never taxed under the GST tax. No tax is leviable under this. They are exempted from the, they come under GST only, but they are exempted from the tax. So petroleum products and liquor for human consumption, they are not at all under GST. They are called non-GST goods. And this is thing. And next one is, so GST we have learned. And after that, what about the registration? So here, every dealer, every businessman, when every businessman required as per the limits, if required as per the limits, and one more thing I will tell you. So if the turnover exceeds these limits, they have to get registration. They have to get registration, they have to get the GST number. They have to get the GST number. They're called, when the GST number means they have to register under the GST Act. Under the GST Act, if you register, you will get the GST number. GST number is called GST identification number. I will discuss later. So GST number. So if the turnover crosses these limits, they have to get registration. Some compulsory. It is called mandatory registration or compulsory registration. It's called mandatory registration or compulsory registration. Sometimes, even if the turnover limit does not exceed the given limits, even then we can, if you want, we can get registration. You can get registration and get the GST number. In such a case, the registration is called voluntary registration. So we are not crossing the limit, but still I am getting the registration. That's why it's called voluntary registration. In addition to that, so if we exceed these limits, we have to get the registration, mandatory registration or compulsory. In some other cases also, even if the limit is not crossed, we have to get registration compulsory. This is voluntary. Or even if you does not cross the limit, in some cases, that is exceed. This is called, the limit is called threshold limit. So exceeding the threshold limit, that is one compulsory mandatory registration. And some cases, interstate suppliers, that is when you are going supplying the goods, if you supply the goods, supplying is selling the goods, supplying the goods within the state, they are selling, it is called intrastate. Intra means within. Intrastate sales, every time in the GST, sales are called as supplies. Sales are called as supplies. Not only goods, services also. Sale of goods or sale of services are called as supply of goods and supply of services. Okay. And one more thing is, the person selling the goods is called seller. Generally, it's called seller. But in the GST Act, it is called sale of goods or services is called supply. So seller is called, not seller, is called as supplier. Supplier of goods or services. Okay. So if the suppliers, if they supply the goods to within the state, it is called intrastate. If you supply to other states, that is status in the other state, it is called interstate supplies. It is called interstate supply. So if there's every person registering on the GST Act is the trader is called as Dealer is called as dealer. So register, when you register that, we call it as registered dealer. So any dealer supplying goods interstate, that is interstate suppliers, definitely have to get the registration. So if you sell within the state, we can follow these limits. If you sell to other states, then definitely you have to get registration. Even if you, the limit is not the special limit, is not the, then ECO means electronic commerce operator, like Swiggy, Uber, Ola, all these are called electronic operators. They provide one platform to the consumers, and the consumers can get services or goods through these platforms. These are called electronic commerce operators. Now, these electronic commerce operators have to get the registration compulsory in the respect of the limit. And casual taxable person. Casual means casually a person do business for some time and then close it. Just casual, like exhibitions, all the stalls will be opened, they will do the business just for some days and then they will close it out. These people are called casual taxable person. When they are selling, they have to pay tax. That's why they are called casual taxable persons. Casual taxable persons, and they have to get registration compulsory. But for them, there is no special provision. The registration will be granted for a limited period, like 3 months. So for 3 months, they have to get registration, and they can do business, and they will close, that registration will be closed. Okay, like that. And then non-resident taxable persons, any person from other countries, they can come in India, and they can do business for some time, and they'll go off. They are called non-resident taxable persons. All these persons also, they have to get the registration. But casual taxable person as well as non-resident taxable persons, they can get the registration for a limited period. They will do business for a limited time, not permanent. That's why they can get registration for a limited time, and they can do the business and go. So this registration is also called mandatory registration. So exceeding the threshold limit, or even if it does not exceed the threshold limit, these cases they have to get the registration. And in other cases, if the threshold limit is not crossed, by voluntarily, if you want, you can take voluntary registration. Okay. Then in India, the business people, they are divided into 3 types. They are divided into 3 types because of the business. Depending on the business, these people are divided into 3 types. Traders, purchasing and sell of goods in the same condition. They will not purchase goods with some profit, they will sell the goods. Manufacturers, they purchase some raw material, they will calculate the manufacturing activity they conduct and sell the goods of finished good they will sell. They are called manufacturers. Service providers means only providing services like accounting services, audit services, legal services, the lawyer, legal services, telecom, transport, installation services, advertisement, all these are called services. These people are called service providers. Okay, and then when I told you we have to get the registration, this is general. That is for the business. Depending on the business, the traders or the business people are divided into 3 types. And now, what about the registration? What about the registration? So every person have to get the GST number, which is called GSTIN. GST Goods and Services Tax Identification Number. GSTIN means Goods and Services Tax Identification Number they have to get. So for getting the GSTIN, I told you they have to get. So for getting that, you have to register with the government under the GST Act. So for registration, there are 2 types. Registration, the dealer, the registration, there are 2 schemes. For the registration, there are 2 schemes. The dealers are called, there are 2 dealers, 2 types of dealers for the registration. Registration type means one is, the dealers are called scheme. Number 1 is composition scheme. The scheme for the registration, there are 2 schemes. One is composition scheme and the other one is regular scheme. What is meant by composition scheme? Composition scheme means it is meant only for small traders. It is only meant for small traders. Small traders. So in the small traders, they are called composition dealers. The limit is, that is, they have some limit. That is, the composition dealers means if the turnover, small dealers, turnover is up to 1.5 crore, not more than 1.5 crore. So if the turnover is less than up to 1.5 crore, not more than 1.5 crore or less, they are eligible for composition scheme. In the case of, I told you, Northeast state, special category states, the limit is only 75 lakhs. Only 75 lakhs. Only 75 lakhs. For these people, composition scheme is imposed. That is available. In this case, the restrictions, there will be some restrictions, but obligations are very less. The less restrictions and less obligations for this are the rules and regulations for the composition dealers. So what are the rules and regulations? Means first one is for the small business. For this business, what we call the composition scheme, the business people are divided into three types. This is main thing, main purpose. This is three types. Regular dealers, that is what we call traders, manufacturers, service providers. This is the main for that. That is actually for the regular dealers. This composition scheme, there are three types of dealers. That is, then number one is manufacturers and traders. They are both mixed up. Manufacturers and traders, and the second one is restaurants. Second one is restaurants. These restaurants, here. So restaurants means restaurants which do not serve alcohol, that is liquor. Without serving liquor, the restaurant, if it has less than 1.5 crore, it can register, it can take up the composition scheme. And the third one is service provider. Composition is service provider. Is that here? So manufacturers and traders, one category, under the composition scheme. Under the composition scheme, one, manufacturers or traders. Number two, restaurants without liquor, not serving liquor. And the third one is service provider. They are providing only services. These three people. Okay. Here I have to here from there. Okay. See, these are people, and in these cases, for these people, what are the restrictions? What are the restrictions? They have, when the registration is done, and under the anything under the composition scheme or regular scheme, under the composition scheme, so there are some restrictions. The restrictions are, I'll tell you, there are some restrictions, some rules will apply. These rules will apply only after the registration. So if it is registered under composition scheme, the rules will apply. The rules will apply after taking the composition scheme. Number one, these composition dealers can only sell within the state. That is, intra-state supplies only they can make. They cannot sell in other states. Only the same state they can supply. They can sell, but they can purchase anywhere. So they can purchase anywhere because when they are purchasing, they will pay tax to other states also. That will come later. So composition dealers can purchase anywhere in the country, in any state, but they can sell only within the state. Okay. Now, so the first rule is they can sell this composition dealer, they can sell only within the state. This is one. Next one is no ITC available. No ITC available. Because this composition dealer, this composition scheme will take up later after a long time. That is, generally we follow this regular dealers only. We follow now, and after completing the regular dealers completely, then we will go to the composition scheme and how they maintain the accounts, how to show in the books. That will come. So then we will learn again. But now just to learn about the theory. That is, no ITC available. What is meant by ITC? Generally, when the persons buy goods, so the supplier will issue the invoice. In the invoice, they will charge the tax also. Goods, value of goods as well as tax they will collect. Okay, so they will pay. The supplier will collect from us, so we will pay tax also. And that tax is called, when you are purchasing goods, the goods are coming in, input and inward supply. So that supply is called inward supply. We are purchasing, we are paying tax, means it is called inward tax, inward supply tax, or it is called input tax. Input tax, it is called input. So we are purchasing, that is goods are coming in. So they are called input tax. When you sell the goods, goods are going out, they are called outward supply. They are called outward supply. So when the supply is made, when we sell the goods, we charge, we collect the tax from the buyers, are called customers. So that is output supply we are making. So the tax is called output tax. That is output GST. So this is called input GST. That is called output GST. So when you are collecting that, that is to pay to the government. So when you are making the payment to the government, that is paying the output tax. This input tax already we paid, that is to be deducted. It will be adjusted and the balance only will be paid. And only the balance will be paid. And only the balance will be paid. That is why the amount which are paying will be taken back to us, that is by us. That is why it's called input tax credit. So we will get input tax credit. But in the case of composition dealers, they cannot take input tax credit, because they cannot take input tax credit, and when they are selling the goods, they cannot collect the tax. They cannot collect the tax. So when they are buying, they have to pay, because the other person is a regular dealer. It may be, he may not be composition dealer. So he will charge the tax. So he will charge the tax and we pay to them, but we will not get it back. So, but when they are selling also, we cannot collect the tax. So no it is available, no GST can be collected from the buyers. And one thing here, in such a case, and when you are not liable, you are not eligible to collect the tax, but when you are selling the goods, you have to pay tax to the government. How will you pay? You will collect the tax and you will pay the tax to the government. But now we should not collect. A composition dealer cannot collect tax from us. In such a case, how to pay? In such a case, he has to pay tax to the government, from his pocket. Whatever he sold on that at a certain percentage, he has to pay to the government, but he cannot collect from the buyers. That is, he cannot collect from the customers. How they can, what is the amount they have to pay is, I told you, under the composition scheme, the dealers are manufacturers or traders. The manufacturers or traders, they have to pay 1%. Manufacturers or traders have to pay 1%. Note down. If you want anything, you note down and watch the video again, you will understand. So the manufacturers or traders, they have to pay 1%. Previously it was traders 1%, manufacturer 2%. Now it is completely, both are same. Now both are same. That is, manufacturers and traders, they have to pay 1% of the turnover, that is of the sales. The second one I told you, under the composition scheme, the second one is restaurants without supplying, that is not supplying, that is restaurants not serving liquor. If they serve liquor, they cannot be composite dealers. So if they don't serve liquor only, they will be composite dealers. So second one, restaurants not serving liquor, they have to pay 5%. So first one is 1%, that is 1%, they have to pay. The 1% is to be paid by 1% is to be paid some manufacturers and traders, and 5% is to be paid by the restaurants not serving liquor. Restaurants not serving liquor. And the third one is service providers. This also. So in the service provider, they are provide only service. They provide only service. They will not deal with any goods. In the case of service providers, they have to pay 6%. They have to pay 6%. They have to pay 6%. But in this case, there is some limit on that I told you already. In this case, I told you service providers, that is, in the case of service providers and restaurants, in all these cases, the limit is 1.5 crore, and in the special category states, it is 75 lakhs. But in the case of service providers, this is the third type. Service providers, it is only service providers, it is only service providers, it is only 50 lakhs. Service providers, it is only 50 lakhs. So, ordinary traders or manufacturers, 1.5 crore, and in the case of special category states, it is 75 lakhs. But in the case of anywhere in India, in the case of service providers, it is only 50 lakhs. So 1.5 crores, and in the special category states, 75 lakhs for the anyone. But in the case of service providers, it is only 50 lakhs anywhere in India. So this is the thing about this one. And then other restrictions. So no ITC, only intrastate supplies, that is supply is in the state, no ITC, no GST to be collected, and they have to pay tax from their pocket. They cannot collect from the customers. They have to pay these percentages from their pocket on the sales. Okay. And then second one, the next one is fifth one. Next restriction rule is they have to give the bill. Every person has to give bill now. In this case, when they are giving the bill, in the bill, they cannot collect the tax. That is, they will not charge the tax. They will write the only value of the goods. There is no tax. That is why there is a special name given for that bill of supply. Not only this, composition dealer, but also without tax means, no tax means exempted goods also. They are not charging any tax. They have to issue only bill of supply. Understand? Only bill of supply they have to give. Okay. And then next one is in the bill of supply, they are not collecting. That is why they are not collecting any tax. They are not collecting any tax. They are issuing only bill of supply. That is why they need not keep record of any bill, because bill of supply they need not keep the record because they are not collecting anything. If they collect, they have to tell the government how much they collected. But in this case, they are not collecting. They are paying from their pocket. That is why the no record, bill account record need not be maintained. And then, so they cannot collect from the customers, but they have to pay. So when they have to pay, as per the 1%, 5%, 6%, when they have to pay is they have to pay quarterly. They have to pay only quarterly. So for every quarter, they have to pay the money. What is the sales for the 3 months? And on the 3 months, they have to calculate the percentage and they have to pay to the government. That's right. They have to pay only quarterly. So they have to make the payment quarterly, and quarterly, when they are making the payment, they have to file a statement. It's called a statement CMP08. That is stating what is the supply for first month, second month, third month. What are the total supply sales and what is the tax calculated the percentage. Okay. So by calculating the percentage, they have to pay the tax as well as they have to file only CMP08, that is statement, because the government has to know what is the sale, how much you are paying. That is why CMP08, we have to file quarterly only. And then every year, once in a year, giving the total details, they have to file a return. Return means filing everyone is required to file, but in this case, he has to file return. GSTR4 returns are called here GST return. GST return 4, GSTR4, he has to file once in a year. So every quarter payment as well as CMP08 statement, and once in a year they have to file the they have to file the return called GSTR4. So this is regarding this composition dealers. And what about the others? So all other dealers, that is whose turnover is more than 1.5 crore and 75 lakhs in the case of special category states, 50 lakhs in the case of service providers, and in the composition dealers also, restaurants, if they serve liquor, then they will come under this one. So all the dealers They are called as, they are called as, they are called as, they are called as, they are called as more restrictions, and they are called as regular dealers. That is, they are regular dealer, composition scheme and regular scheme. The persons registered on regular scheme, they are called as regular dealers. That means turnover is more than 1.5 crore or more than 75 lakhs and more than 50 lakhs for service providers, and restaurants also serving liquor, they come under regular dealers. In the case of regular dealers, there will be more restrictions and more restrictions and a lot of obligations also. And lot of obligations also in the case of regular dealers. So what are the obligations and the restrictions or rules and regulations relating to the regular dealers? So in this case of regular dealers, there is no turnover limit. But in this case, only 1.5 crore. But here, there is no turnover limit. You can do 10 crores, 100 crores, 1,000 crores. So there is no turnover or sales limit, as well as there is no area restriction. So you can sell anywhere in any state in India, and you can buy from any state. So sales and purchases you can make in any state. There are no restrictions relating to the turnover, as well as the sale or purchase of goods in any state. So there are no restrictions, but there are some other rules and regulations. Number one is ITC on purchases can be claimed because he is a regular scheme dealer. So the ITC, when you are paying to the on the purchases, the input tax, it is called the input tax, you can take credit. So ITC can be, that means input tax credit can be claimed from the purchases, as well as GST can be collected from the customers. So from the customers you collect the GST that is to be paid to the government. In that we can adjust the or deduct the input tax already we paid. You can deduct, and the balance only we have to pay. Okay, and then GST can be collected. That is how the GST will be collected. In this case, the GST will be GST will be collected from, collected, and when you are making payment, we can make adjustment. Example, I will tell you, when you purchase for 10,000, GST is 18%. So it is 1,800. So it is called input GST or ITC. ITC is 1,800, total is 11,800. Now, when you sold the goods for 10,000, that is value of the goods. Profit, you have taken 3,000. Total is 13,000 rupees you are selling. But the GST is 18%. It is 2,340. It is called output GST, input GST, output. So when I'm making the payment, the formula is output GST minus input GST. That is the tax payable. In this case, output GST is 2,340, and then input GST already we paid is 1,800. But to deduct that, the balance only 540 only you have to pay, because you have to pay 2,340, 1,800 already paid. So only 540 we have to pay. This is called, this is the formula. This is the formula. Output GST minus input GST is equal to GST payable. Okay, this is the thing. So that can be that our input GST or ITC can be claimed and it can be adjusted against the index. So when you are collecting the input, the output GST, when you are collecting and paying to the government, it is also called as liability, because you are collecting. It's paid to the government payable. So it is a liability to the government. That's it. And this is the thing. And ITC can be claimed from the GST balance, and the GST balance will be paid. And then the most important thing is these regular dealers or regular scheme dealers, they have to file documents. They have to file the returns every month. Every month he has to file. This person every month has to file. When they are filing 2 returns. They have to pay GSTR 1, GSTR 1, GSTR 1, and GSTR 3. So 2 returns they have to pay. Every month they have to pay. See here, we have to show the purchase and sales, everything. So in the GSTR1, we will file all the sales, and in the GSTR3B, what are the purchases made? That is, what is the, when you are making purchases, in this case, we need not show the purchases. We have to show the, what you call, we can show the input tax only. So what is the input tax? That is on purchases. So purchases details, that is tax on purchases, as well as sales, what is the difference, what is the amount payable. So in this case, only sales in the case of GSTR1, in the GSTR3B, all the details will give, and we will calculate the tax payable, and we will pay the tax which is shown in the GSTR3B. Like this, you have to pay two returns every month. Two returns every month. But in this case, there is one small thing. In this case, in the case of the regular dealers, there is one small requirement here. When you are making the sales, if the sales are, I told you already, every month they have to pay these two. But if the sales are turnover is more than 5 crores, they have to pay every month. Every month they have to make it. They have to file this. If turnover, means if the turnover is less than or not, turnover is not more than 5 crores. Not more than 5 crores, then we can pay water bill. We can take water bill. So if it is every month, if it is not more than 5 crores, they can file these documents. That is GSTR1 and GSTR3B. They can provide water bill. That means if turnover is more than 5 crores, then monthly we have to pay. Understand? So if the turnover is more than 5 crores, definitely we have to file every month these two documents, these two returns. If the turnover is not more than 5 crores, we can file quarterly document. So this quarterly returns, this scheme is called QRMP, because we are filing the returns quarterly. So it is called QRMP. That means quarterly return. We are filing the return quarterly return, but you have to pay the tax every month. So government will not lose the money. It will collect the money. That is money we have to pay every month. Like both in this case, they are paying the tax every month. Not like that. Tax is to be paid every month, but returns can be paid quarterly. It is a big headache. The scheme is not at all good because every month you have to pay the money. Quarterly, we have to pay the returns. And in addition to that, every month for making the payment, we have to make all the calculations like this. What are the sales? Like GSTR1. What are the sales? What are the purchases made? What is the ITC? And what is the balance payable? Like they have to make all the calculations and they have to make the payment. As well as this, we are GSTR1, GSTR3, we are paying, filing quarterly. But every month also, we have to file a statement called IFF, Invoice Furnishing Facility. There is one facility. That means the buyers from us, if you file the GSTR1, they will get the ITC. So they are purchasing from us. So the purchasing means they will get ITC. So they will get ITC from us only if you file. Otherwise, they will not get. So if you don't file for 3 months, so they will feel bad because they will not get this ITC for 3 months. So the business will be affected by it for us. That is why instead of that, every month if you file this one, they will get ITC. For that, you need not file one. We will file another one. It is called IFF, Invoice Furnishing Facility. So that invoice details we have to file as a statement. Then they will get the ITC. So we are doing the same. So every month they are making the payment and we are filing the IFF And again, every quarter, we are making, we are filing the GST-R1 and GST-R2. Instead of all this work, simply every month if you file, it will be better. But this scheme is not good, and this scheme is good. That is why 95% of the business people, dealers, they follow the monthly payment, monthly filing only. Quarterly filing PRMP, many people don't like it. It is not a good program. Okay. And then what about the registration? What about the registration? To get the, and all this, depending on this turnover, that is threshold limit and all this, you want to get registration. You have to get registration. So to get the registration, how you will get the registration? How you will get the registration? How you will get the registration means there is one portal that is called one site. This GST network for all the GST work, for all the GST which we have to do in the government website. It is called, for the GST network, they developed a website called portal. That is called GST portal. The GST portal, they develop for all the works from registration to filing of returns, payment, everything. They maintain, they developed a website called portal. This is called GST portal or common portal. So I will show you that. So this is called GST portal. The address of the portal is www. www.gst.gov.in. See that? See. www.gst.gov.in. This is the website. In this website, that is in the portal, we have to get the registration. So if you open this, so come down, here you will get register now. If you click that, register now, if you click that, the registration form is open. We have to give our details here. New registration. I am a taxpayer, dealer. I am a taxpayer, state, district, legal name. And one more thing I will tell you. This GST registration is based on PAN card. Without PAN card, we cannot make GST registration. It is based on PAN card. On whole India basis, anywhere in India, you register, you require the PAN card. On the basis of the PAN card only, the registration will be made. That is why on the PAN card, our name will be there, legal name. So that legal name, in the name of person, in the name of business, the legal name of business. If you are the person, our name will be the legal name. In the case of a business, if you get the PAN card in the name of the business, that name given in the business PAN card is called the legal name. So the legal name we have to give our name in the case of person, in the case of business, business name. So legal name and the permanent account number correctly we have to give, and email address which we use every time, and for all the correspondence relating to the GST, that PAN card, I mean the informations, the emails, as well as one-time passwords, all these will come to this email address. You have to give the correct email address, and then mobile number. And in this case, in the mobile number, previously, anybody, any number can be given. Sometimes the auditors or consultants, they'll give their number. But now they restricted this. And after registration, we have to, I mean, in the next step, we have to upload our Aadhaar card. Aadhaar card is to be linked. So PAN number is given, as well as Aadhaar number is also to be given, and Aadhaar card is also to be uploaded, or Aadhaar number is to be given. That is why in the Aadhaar card, when you are making the Aadhaar card, in the Aadhaar side, what is the mobile number we give? Only that mobile number you have to give. Other mobile numbers you cannot give. So we have to, before entering this, we have to go to the Aadhaar side. We have to check out what is the phone number we give, mobile number. So that number only we have to give. And after this one, you enter the CAPTCHA, then proceed. Click proceed. If you click proceed, it will show your temporary registration. Temporary registration is done, and they will show, they will give you temporary reference number, TRN. Temporary reference number, you have to note down that temporary reference number. And after that, with the temporary reference number, with the temporary, in the temporary reference number, along with that, I mean, with the help of that, what you have to do, we have to log in. We have to log in, it will show. See here, registration, it will be now. So registration, if you go, the same page you go, and here we are registering new registration. Then you select this temporary reference number. It will give the ask the reference number. So we have to give the temporary reference number. We have to give the captcha, no password, nothing. We have to give, then proceed. Then the actual registration form, all the details relating to the business. First, in the case of this new registration, we have given details about us. But in this case, we have to give the details of the business, the location of the business, address of the business, when the sole proprietor, or whether the partners, or the names of the partners, and what is the type of business, and what is the everything, all the details related to the business, we have to give. All the documents we have to upload in those forms. Documents in the sense, in the case of the associates or the persons, depending on the status, whether for individual means or firm, that is partnership firm, or joint stock company, or depending on Hindu or divided family, depending on the status of the person, we have to give some documents are prescribed. We have to give those documents, we have to upload those documents, and at the end, you have to submit that. Submit, then they will give you temporary registration number. Here it is temporary reference number. After completing that, they will give you temporary registration number to verify that. Okay, and with that, what they do, and if you do that, and they will give you your registration number. They will give you within 4 or 5 days. They will give you the registration number. So the phone number and email address you are given. So to the phone number, to the email address, you will get the email, and in the phone number, they will intimate you the GSTR number. That is GST identification number, GSTIN. Yeah, for all the correspondence, we have to quote the GST number for all the purposes. So that is with that, our registration process will be completed. Okay, and then so this is the about the registration. After that, registration. So with this number you have to do it. And then there are some more other restrictions. What you said, I gave you some 3, 4 restrictions. And then the other restrictions are, we can collect the regular dealer can collect from the customers. They can collect the tax from the customers. And when you are collecting that, we have to issue the bill. So in the bill, we are collecting the tax also. That is why the name of the bill will be different. In the case of compound dealer, it is bill of supply. In this case of regular dealers, it is called tax invoice. So name heading should be tax invoice, because in the invoice, tax is also levied. That is why along with the tax, the value is called invoice value. That is why it is called tax invoice. The customers, you have to issue the tax invoice to the customers, and tax paid every month to the government by filing the returns. Tax is to be paid, and returns are filed, and all these things. Okay, and then okay, then types of dealers. Okay, the types of dealers they are taken: regular dealers and this. And in the case of these regular dealers or composition dealers, broadly the type of dealers, there are 2 types of dealers. That is regular dealers and composition for the registration, depending on the registration. And in this case, the persons are, there are 2 types of persons, because what I told you already. So depending on the threshold limit, we can get registration. If you don't cross the threshold limit, we need not get registration. That is why the dealers in this case, in the case of GST, the dealers are 2 types. Registered dealers. So in the registered dealers, regular dealers and composition dealers, because they are registered, they get the registration number, that is GST number. That's why they are called registered dealers. Registered dealers means regular dealers as well as composition dealers. They are called as registered dealers under the tax. The second one is they are not registered. They need not get registration. That's why they are called unregistered dealers. Unregistered or consumers. If it is a person, he is called consumer. If it is a business, It is called unregistered. They don't have registration number, they won't register. That's why unregistered dealer are consumer. But in the portal, both unregistered dealers and consumers, they are called as consumers only. Not registered means consumer, whether it is a business or not. Individual, consumer. If it is a business, unregistered dealer. These are the two types of dealers. And in the case of this one, GST we are paying. We have to pay the GST. And one more thing I forgot. And after getting the registration, they will give you the registration number. That is, they will give you the GSTIN. That is GST identification number. It is based on PAN card. That is on whole India basis. Wherever you register, you will get the PAN card based registration number. That is your PAN card number will be added in the registration number. So they will give the registration number. It is called, and it has 15 digits. The number will have 15 digits like this. The number will have 15 digits from year to year. So the number will be 15 digits. So in this 15, what is the meaning of 15 digits? Means the 15 digits will be like this. The 15 digits will be like this. So in this case, the first two digits will be numeric. Numeric means it is state code. Every state from 01 to 37 in India. 01 is Jammu and Kashmir. So every state has number, code number. We go to Google, we take GST number, GST state code or state code under GST. It will display all the state codes. So their first two digits will be the state code. First two digits will be state code, and then next 10 digits will be next to 10 digits will be up to G. That is 10 digits will be the PAN card number. The PAN card number will consist of 5 numeric alphabets and 4 numbers, 1 alphabet. 5 alphabets, 4 numbers, and 1 alphabet. Total 10 digits. These 10 digits are for the current. And in these 10 digits, in the alphabets, the fourth one, that is last but not. The fourth one indicates the status of the person. That is, P means person, individual. F means partnership, firm. And then C means company. C means company. Then L means local authority. A means association of persons. Like that, it will indicate the status of the person, status of the dealer. Status of the dealer is a person or a firm or company, or H means HUF. L means local authority. Like that, they will indicate. So this is the PAN card. So 10 plus 2, 12. After that, there are 3 more. 12, then there are, after this PAN card, there will be a numeric number. This numeric number, year 1, year 2, it indicates the number of registrations. I told you, on all India basis, whenever you register under the GST, it will be registered under the PAN card only, and with the help of the PAN card. So on this PAN card, how many registrations are there in India? So if there is 2 means there are 2 registrations. If it is 1 means there are 1 registration. So this is the number of registrations. So state code, PAN card, number of registrations, and then next one is Z. The Z is it is a default number, default numeric. Default digit means default, which will be default Z to everyone. That will be there to everyone. It is a default alphabet. What does it mean? Here the registrations are 2. Up to 9, it will be single digit. It will show 9. If the registration are 10 or more, in that case, if you pick 10, the number will become 16 total digits. So total result should be only 15. That is why the Z will take place of, Z will disappear, and the second digit, 10 registration means 10. So the 0 will be, will replace the Z. So that will disappear, and the second digit will be coming there. That is why that is the default digit. Okay, that will disappear from 10th registration. Till that, every GST number that will be there, and after that there will be one number, there will be number, or there will be number or alphabet. Number or alphabet, it is only check digit. It is called check digit, either number or alphabet. Check digit, it will verify the correctness of this PAN card, of the registration number. If there is any error, it will find the error. It will find the error, either numeric digit or alphabet, only one. So there 2 plus 10, 12, 13, 14, 15, either one, either number or digit. This is the form of the, GST identification number, GSTIN. Okay, and then when I told you already, tax paid is to be called, we already paid tax for purchases, it is called input tax or input tax credit. When the tax is collected, it is called output tax or tax liability. Output tax means output supplies collected tax. Input tax means input supplies paid tax. That's all. Okay, and then in the GST, there are some types of GST. In the GST, how the GST is collected means the sales are made within the state or outside the state. Within the state or outside the state. So if you make the sales within the state government and central government will share the tax. State government and central government will share the tax. That is why the GST is shared by state and central. So CGST, central GST, state GST, two taxes, that is 50-50. They will share the 50-50 because on the rate, suppose it is 18%. So central will state 9%, state will state 9%. So CGST will be 9%, HGST will be 9%. So in the case of intra-state sales, in the case of interstate sale, out of state, whereas another state if you sell, then the total amount will go to the central government. It is called integrated sales tax. Integrated GST means the both are integrated. That is why it is called integrated tax to go to the central government. But after that, it will share the 50% with the state in which the goods are consumed. It is a consumption based, that is destination based tax. That is why when the goods are, where the goods are consumed, the tax will be shared with that state by the central government. Okay, that's why there are, in the case of this one, there are 3 acts. IGST, there is 1 act. SGST, there is 1 act. CGST, there is 1 act. For SGST, in the case of union territories, the union, instead of SGST, UGST tax is there, but in the portal, union territory tax as well as state tax, everything is called as state tax only. So IGST, HGST, all are passed in 2017. They are called IGST, CGST, HGST. I'll show you. See, for example, interstate 18% or 18%, value 10,000, 10,000. In the case of intrastate, means home state, same state, CGST 9%, 900, HGST 9%, 900. Total will be 11,800. In the case of interstate, the rate is 18%. Here, shared by both 50-50. Here, total amount will be taken by the central government. That's why here, total IGST will be 18%. So total will be the same, 11,800. Here, state and central will share. Here, total will be integrated. This is called IGST, CGST Act, CGST. Okay, so like this, there are 3 types of acts. So within the state, CGST and the HGST will be levied 50-50. In the case of interstate, state supply in another state, the total amount will be called as IGST. Okay, understand this? So this is the thing. And in this, What are the different rates of taxes? They're called different. For example, for electricity, you consume so many units, use the rate. So many units, use the rate. Like that, that's called slab rate. Like that, in the sales tax also, GST also, there are 5 slabs. One is 0%, 5%, 12%. This is the total tax that will be shared by both the states and central. In the case of IGST, total will be go to central government. 5%, 12%, 18%, 28%. So these are the 5 types of 5 slab rates. And how the government decided this means most needed, most essential commodities. So that will be 0%. And generally needed, not very essential, generally needed, then 5% will be generally needed, used by all the people. They are called and they are taken as 5%. And less essential, not very essential. This is very essential. This is less essential. Then 12 or 18% will be charged. Not essential at all. Not is most essential, less essential, not essential at all, and they are actually luxuries. They are called cars, mobiles, TVs, and all this. That is not essential at all. That percentage will be 28%. So these are the 5 slab rates in the GST Act. Okay, this is the all about the. I give the full picture of the GST, full picture of the GST. With this, because the video will be very lengthy because I have given total picture of this, and tomorrow onwards, next video onwards, we will state how this GST will be enabled or how it will be activated in the tally, and then how to work in the tally with the GST that we will take out. And here, one request to you, please subscribe to my channel and click bell icon and select all to get the notification for all the videos which I am uploading, and you share with this channel with all your friends as well as others who want to learn the tally file. And then when you are watching the video, watch the video till the end and then like the video. If you skip in the middle, you will not understand the balance. Okay, and this one. And when you are watching these videos, you watch the videos in the same order in which I am uploading. Otherwise, then in such case, you will get expert knowledge and you will become expert accountant. Otherwise, you will not get very good knowledge. That's my request. And one more thing is, I started and I am running online classes. Offline is not possible for me. An online class I am running, and I am going to start another batch of the online classes. Another batch I am going to start. So if anyone require online to attend the online classes, you please contact me. My mobile number is given in the about section. In some videos also it's given. But in the case of the mobile, you send me only WhatsApp message because in other country. You send me only WhatsApp message, then I will call you and I will talk to you, and you can register your names, and I will start very soon. I am going to start the new batch. And with this, I am stopping this. Thank you. Good night.